Andrew Swan from Man GLG. Welcome to the Growth Symposium.
Good morning, thank you.
Can you walk us through the opportunity set for your Asian equity strategy?
Look, it's a diverse opportunity set. It also is pretty volatile through time. We've seen that in its history. But I think what's really interesting about the region right now is that growth is actually improving for the first time in a long time, and also growth is expanding versus where growth rates are in the rest of the world. That's normally the ideal time to be investing, both for positive returns and also relative returns.
And you've been investing in the region for a long time. Can you expand on your background or history investing in Asia?
Yeah, I've just gone through 20 years of investing in the region. Obviously, we've seen a lot in 20 years. I've spent most of that time in the region investing and moved back to Australia a couple of years ago. The only reason I've survived 20 years is being able to navigate the volatility. We've seen extreme bull markets, extreme bear markets. We've seen leadership from Indonesia. We've seen leadership from China. We've seen consumer tech and all financials. There's been so much change over that 20 years, but I've been able to deliver consistent returns versus the benchmark over that period by sort of understanding the environment and being flexible around where to find that opportunity through time.
And China's such a huge part of Asia. How's your view on China changed in the last few years or evolved?
Yeah, look, China has some long-term challenges that haven't gone away. And I think there's a real need for pretty significant structural reform to find new sources of growth, because the old growth model, which was really credit-fueled, has really in its final days today. So without structural change, I think you're going to find that China moves into a lower growth environment. This year is an exception. There's an opportunity because it's been 3 years stuck in COVID with borders shut and household spend generally shut. So we're seeing mobility-led recovery this year, which is helping a number of parts of the stock market and the economy. I think it's a fairly sort of short-term opportunity, but there is definitely opportunity within the market still. So as we get through this mobility-led recovery and we move into the next couple of years, I think it's going to be more about what's happening inside the market, individual companies, rather than just saying you should be buying China because it's bigger.
Are there one or two sectors that are standing out in that either reopening or longer-term growth opportunity?
Yeah, look, it's a period of divergence. I could say consumer discretionary, but the reality is there's a consumer rebound, but it's fairly modest. It's not like what you saw in the West coming out of COVID, a broad-based rebound. So within consumer, we can definitely see opportunity around things like travel and entertainment, where we're seeing real revenge spend. And already just a couple of months after opening up, we're seeing spend levels above pre-COVID levels. But it's coming at the expense of other things within the consumer discretionary decision. And we're seeing things like TVs and refrigerator sales are still really weak. So it's actually almost subsector and company specific. We're seeing divergence even within the tech space. Some companies are doing well, some doing very poorly.
And you've spoken about the longer term returns from emerging markets being quite muted. What's the key, almost persistent trait of companies that are doing well?
Well, the fallacy of investing in the region is you buy it because it's high economic growth. The reality is that hasn't worked. It did work in the 2000s when growth was strong and improving. That's the ideal environment for corporate profit growth. But the last decade, growth started high and then gradually slowed down during the course of the year. And that was difficult, therefore, for corporate profitability as a whole to really expand. So even though GDP doubled over the last 10 years, corporate profitability was effectively flat. And guess what? Equity markets were flat. So the real thing to focus on is corporate profit growth. The market is very fundamentally driven, and ignore just economic growth, because it's not the right way to think about investing.
Is there anything specific you look for or are wary of when investing into Asia compared to, say, developed markets?
I think a lot of the risks are similar to the West. And actually, a lot of developed market financial and policy decisions influence the region. When it comes to governance, we have similar issues in Asia as we do in the West. Obviously, this is an environment where you need to be aware of those risks and doing your best to avoid those risks. What we find is, though, it is a very fundamentally driven market, and the best opportunities within a fundamentally driven market are the ones which have better fundamentals than the market's anticipating. And that's what's got me through the last 20 years, in fact, is identifying where those companies are that are doing better than what the market expects fundamentally. And that's how you generate consistent returns through time.
And what's one of the most compelling opportunities in your portfolio today?
I think at least for the time being, and maybe into next year, I think that travel and entertainment areas within the Chinese consumer still feel underappreciated. They've done well since opening up, or expectations of opening up in October, but it still feels like there's a bit more to go in there. Outside of that, the South Asian markets, Indonesia's doing extremely well. I think India's going through a bit of a slowdown, but that will, stabilize at some point through the course of the year. But that South Asian market, I think, looks pretty compelling. I do believe we're in a weaker dollar environment, and capital liquidity globally is going to continue to look for higher growth opportunities, and it's going to find its way into these local economies. And Indonesia, India, Philippines, these sorts of markets, I think, are set for some pretty good environments going forward.
Andrew Swan, thank you.
Thanks very much.